This video is for entertaining purposes and not an investment advice. Seek professional opinion from licensed consultants. Intel shares, ticker symbol INTC, have lost about 16% in a month since the last earnings report, underperforming the S&P 500. Intel reported third quarter 2020 GAAP earnings per share was $1.02, down 25% year-over-year. Non-GAAP earnings per share of $1.11 was down 22% year-over-year, but still have beaten some experts' estimate and was above Intel's July expectations. However, they have declined 22% from the year-ago quarter. Revenues totaled $18.3 billion, surpassing some experts' estimate, but have fallen 4% on a year-over-year basis. Intel year-to-date generated $25.5 billion cash from operations and $15.1 billion of free cash flow and paid dividends of $4.2 billion. In the third quarter the company generated $8.2 billion in cash from operations and paid dividends of $1.4 billion. In August Intel initiated accelerated share repurchase agreements for an aggregate of $10.0 billion of common stock. Following settlement of these agreements Intel will have repurchased a total of approximately $17.6 billion in shares as part of the planned $20.0 billion share repurchases announced in October 2019. Intel intends to complete the $2.4 billion balance and return to historical capital return practices when markets stabilize. Data-centric revenue declined 10%. In the data center group cloud revenue grew 15% year-over-year on continued demand to support vital services in a work-and-learn-at-home environment. At the same time a weak core economy due to COVID-19 impacted data center group's enterprise and government market segment, which was down 47% year-over-year following 2 quarters of more than 30% growth. The pandemic also weighed on third-quarter data-centric results in the Internet of Things group and the memory business. In the third quarter Intel continued to introduce compelling new products addressing key growth opportunities including artificial intelligence, 5G network transformation and the intelligent, autonomous edge. The PC-centric business was up 1% year-over-year in the third quarter on continued notebook strength to support the work-and-learn-at-home dynamics of COVID-19. In the third quarter Intel launched its newest processor for thin and light laptops, 11th General Intel Core processors with Intel Iris graphics, formerly known as Tiger Lake. More than 150 designs from major PC makers are in development, including 100 designs expected to be in market by the end of this year with more than 40 verified under the new Intel Evo platform brand. These new 11th General Intel Core processors are manufactured using Intel's 10nm superfin process technology, which delivers performance improvement comparable to a full node transition. The company detailed 10nm superfin and other technology advancements at its Intel Architecture Day, held in the third quarter. Intel's third 10nm manufacturing facility, which is located in Arizona, is now fully operational and the company now expects to ship 30% higher 10nm product volumes in 2020 compared to January expectations. Mobileye revenue returned to growth in the third quarter as global vehicle production improved. The business also launched its new Mobileye Supervision Surround View ADAS solution. Intel also announced agreement to sell Intel NAND memory and storage business to SK Hynix for $9.0 billion. Intel have raised full-year revenue and earnings expectations from July guidance, expecting 5% top-line growth year-over-year in 2020 with full-year revenue of $75.3 billion, GAAP earnings per share of $4.55 and non-GAAP earnings per share of $4.90. Analyst rates Intel stock form sell to overweight. It comes with a price target from $40 to $70 that analysts believe is the fair value for the stock. Analyst rating consensus at the moment is hold, with 6 analysts rating it as buy, 14 as hold and 5 recommending to sell. Technical analysis also signals sell or even strong sell suggestions for the near 1-month period. On the negative side, there is no consensus between analysts' rating, and most of them stay bearish, keeping their hold or sell rating for the Intel stock. Moreover, Intel management failed to give clear guidance for the near future, and expectations of only 5% growth year-over-year in 2020 didn't make investors happy. Also, in late July, Intel disclosed new manufacturing problems that will cause a 6-month delay in the launch of 7nm products, which boosted investors' interest in Intel competitors' stocks. The next day, semiconductor giant's stock price fell 16%, while its CPU rival, AMD, gained nearly just as much in its share price. Technical analysis is also negative for the end of 2020. On the positive note, analysts are often wrong. Intel still is an undervalued blue chip, despite all the macro uncertainty. It could be one of the best investments in a market with few strong free cash flow generating alternatives that are not already valued very highly, and its respectable 2.9% dividend yield. Price-to-earnings ratio nearing 9 is also very low, comparing to other semiconductor industry giants like Nvidia with ratio of 76, Texas Instruments with 30, or AMD with 118. Third-quarter revenue was ahead of prior expectations, driven by continued strength in notebook sales, which helped offset COVID-driven headwinds affecting significant portions of company's business. We can expect Intel stock to trade sideways till the end of the year, maybe even hit price of low $40. This would provide us an opportunity to get a discount on this full of potential stock. However, I believe that good news for Intel will start rolling out in early 2021. And in 2-year period, Intel stock could reach $65 or higher, giving us a nice 12 to 20% annualized return plus dividends. Intel, the Intel logo, and other Intel marks are trademarks of Intel Corporation or its subsidiaries. Other names and brands may be claimed as the property of others.